What's up, guys? It's Matt. We're back on Friday here. Been struggling a little bit, honestly, with my lungs and stuff, but I wanted to get back and do a video. At least you guys can go into the weekend with something to review. So let's just I'm gonna just try and run through it quick the last couple of days, okay? So forgive me if it seems a little rushed. I just wanted to get at least something for you guys. So basically, we were at, you can see here actually, first of all, that from the beginning of this week, what do we have? It's exactly like what I said at the beginning of last week. I said, if we start come up this week immediately first, I'm more inclined for it to be a bearish week. And we came perfectly up to here. We were looking for shorts. They happen in London, unfortunately. And then you can see, sorry, let me just put that down there. You can see bearish order flow all the way down. We broke structure there, mitigated. Oh, we actually didn't mitigate that candle. We mitigated the bottom of it there, the low, and then you can see we had consecutive a huge push down, basically down to this last area here that swept liquidity and broke structure, broke significant structure right here. We were looking for some reaction right here. You can see we got it in this wick, bounced up, and then slipped down. Now this becomes our breaker block, right? Because this breaker broke, you can see this is a monthly high right here. Okay, so we broke monthly high. This was also structure, right? Where you're looking at 1, 2, 3, 4, 5, like that, right? This made a higher high right there. So this comes back down, we create a higher high. So this really was, this whole block was where price, this whole block here was where price pushed out of it. So it's going to be a significant level. As soon as we couldn't hold that, I was like, okay, now this is going to become our breaker block. Which is exactly what happened. And we were bearish. We read the price actually really, really well this week. Literally called every single move. It's just the execution was off. So something that it needs to be taken into account for the coming week. And in this weekend, I'm going to be studying a little bit, probably not too much, honestly, because again, I got a bunch of stuff I got to do for my health. But essentially what I was looking at, what I got to do is I just got to run through a couple of things. So actually Thursday, or was it? No, it was Wednesday, was super good because I got this short from here. As you guys saw in the last video, I got this long. I got this long. I just missed this long here. And that was basically it. But then this when was it? Thursday, I was looking at this to hold up here. It's a smaller time frame mitigation, that's why, but you can see it's in that breaker block. And I was actually looking at this whole thing to begin with, obviously, and then we refined down. And you can see in Asia, we ran the previous day's highs into a pool of liquidity with a nice clean leg, just super, super beautiful. But then we came down super correctively. Where did we hit? We hit this breaker block right here. Okay, we hit this breaker block, maintained it, broke structure right here, mitigated this order block, continued up to sweep Asia high. We did that in London, again, in London, where I was anticipating, I was anticipating reversal. If I were up in London, I literally would have taken this right from here. Because if we go on to the, is it 10 minute? No, 5 minute. Okay, yeah, just this right here, we'll just say. So if I was awake here, I probably would have taken it. I was actually looking at taking it right from Asia. But I was like, nah, I'll just wait for tomorrow. Because the reason why I took this one in Asia, this one here, is you can see is that we had structure establishing. I wasn't just catching it at the extreme, where this one would have just been at the extreme, which I don't like catching in Asia. I would prefer if this happens in Asia, then I'll take it from here. But the fact that this was an extreme, I said I'll wait, and you can see that it did run up. However, if my stop was above this, which it would have been completely fine anyways. You can see this massive trend, like you're just so gorgeous. Massive trend that we're following, obviously inducing buyers into the market, And basically, let's see, I'll put the kill zones on so you can see right here is where I woke up at 6:30. So right when price swept right here. And I was looking at taking this buy here and this buy right here. This was beautiful. Beautiful reversal trade after sweeping some significant lows. And then eventually my bias was essentially this. I won't pull up Telegram right now because I just don't have I don't know. The app isn't working right now. I don't know why. Every time I have to re-download it every time I want to use it, which is annoying as hell. But essentially what I saw was this. Okay, let me just mark it out. We had a sweep on liquidity here. Oh, that's not what I went to do. Sweep on liquidity here, which was Asia highs. And then we had a break in structure right here. So this is my trading range, right? This is my new trading range from this high to this low. Now, this is where one of the things that I perhaps did wrong here, that maybe I can, this is why price did what it did. But because we actually broke 4-hour structure right here, I was using this level because I was confident that this level would hold, because this is the level that broke out that 4-hour structure. And this whole thing right here was a breaker block, right? This whole thing was a 4-hour, or really a 4-hour order block, but really just this a nice breaker block here where we got this, and then it broke down. So I was confident in taking this one, especially due to the time where we made this W kind of formation. And I've told you guys about this before. We made a W formation right here, and I was like anticipating an 8:30 or 8:20, 8:30 a.m. sweep where this was going to be the inducement, and right here was going to be the POI, the point of interest here that I was looking to short. Again, I was aware that this was liquidity potentially pooling right here, and I knew that there was this up here, right, that I was potentially looking at for price to get up into. But just based off of the time, and you can see 8:20, like literally as soon as 8:20 hit, we got that sweep up, and I was like, oh yeah, this is it for sure. And what ended up happening was it just rallied more. We had the employment news, and it absolutely rinsed these highs. So I got stopped out right here. But the trade was logical. Like, it was a good setup, I think. I think the only thing that maybe was not good about it was that it wasn't in discount of the higher price swing. But again, like sometimes it's hard to say that, because sometimes, like for example, in this one right here was the exact same thing, where we have a nice breaker block here, and this wasn't 50% of this price swing, I don't believe. Maybe it was. Fuck. Maybe that's where, yeah, it was. Okay, so that's exactly where I went wrong, was the fact that this one wasn't in the overall discount of, or sorry, the premium of this price swing. So that's where I went wrong. But again, I thought I was just playing a little continuation. I was going to play a continuation play because I was so adamant on price coming back down to take out Asia lows and then the previous day lows right here, because we had all this pooling liquidity, and we wanted to see Thursday create the low of the week, which it ended up doing. But again, I took this trade right here from here on the 1 minute, actually, just the refinement on the 1 minute, and you'll see why it made sense on the 1 minute. Right here, clearly we had a nice sweep on structure right here, break right there. And my entry, I actually just took it right off of this. Okay, and then my order got slipped. So I entered it right here. My order got slipped up to 60s. And then my stop was right there. And so, yeah, that was it right there. But again, these buys were actually really, really nice after sweeping. So I could have definitely taken these ones for sure. At least this one right here, where I put my stop there, 4 pips. And then I could have used this as a little bit of a hedge almost, where I could have done this, stop there, or taking right from the order block, and then at least targeting this level. There was some nice confluence at this level. There was a nice confluence at this level as well. So I definitely could have done that, at least targeting it up to there. Now that I know that I wasn't in discount or in premium, sorry, how many times have I said that? Now that I know that I wasn't in premium, it makes more sense. Maybe that was something that I was just not aware of, or like I just thought because of the time, I didn't think we were going to get up that high. But at the beginning of the day, I actually said that it was going to get up to around this level. I have posted in Telegram if you guys want to go check it out. I literally was like, we want to see a W and then a post up to here and then go down. And I had it drawn like this. So yeah, it was just unfortunate, like just kind of squandered it, but that's okay. It happens. When I look at it like this, we see a sweep here, right? Clear sweep. This was the candle sweep, but really this was the candle right here to break structure on the 15-minute. And you can see that's exactly where price reacted from. So this was the true order block. I would say this is where the volume was in between this candle, within this candle here. And you can see within that candle, we have a little bit of a hidden order block right there. After taking out all that liquidity that was resting right here, like I said, and we came right back up into it. And again, now looking in hindsight, it's super evident that right at 8:30 we got that sweep, where to right into premium of that price swing. And so what you could have done if you wanted to take that and you wanted to be super aggressive, you could have been on the 1 minute looking at that level. Right, you had a clear level that wasn't mitigated right here, right? Clear level that wasn't mitigated right here. You can see also that that was the level that mitigated out of the, so this was the last level that ran up, right? And then, so this should have held. If we were looking for longs, right, you'd long from here and you'd be targeting this high. Because that broke, and then it was mitigated with this right here, this block right here, mitigated it. And then this was mitigated by this following block right here, right? These blocks, but this one didn't tag it. So then this was actually an inducement for where the orders should have been resting, which is exactly where it was, right? And then you see something like this, you see a sweep, you see a break of structure. This didn't fit my criteria though, honestly. Like I was looking at it, but the fact that this already mitigated, I was like, I don't know if it's going to go down from here. I would prefer to see it get up to the higher point of interest within this last up candle, to be honest, because there was still some areas up here that I wanted to see on the higher time frame. But you can see that this is exactly where it reacted from. And so if you did take it, you could have easily taken it from, again, this doesn't have my inducement or the inducement that I'm looking for, but you could have taken it probably from somewhere like within this wick, probably, and just put your stop above there. Again, minimum target, you're looking at these at the lows, right? Because that's the next structure. But this is another one. After this, I was just done, guys. Like I just felt so shitty with my I was having a hard time breathing and shit, and I was like, oh, I just don't even want to be on the charts anymore. But ultimately what ended up happening was I saw this as well as a potential, was the fact that we did sweep liquidity here. Again, it was the same thing, right? In that morning, we swept liquidity here. We broke structure here. We broke it here. This was the inducement, right? So I said that if anything, there's probably going to be a reaction from right here. And if you took that, that was a valid buy, because we did have now these equal highs here with a higher time frame POI. And if I go up to the, I believe it's the 1 hour, if I remember correctly. The fuck is it? No, 30. Yeah, sorry, 15. So this is really that block, right? This is the last block that swept structure or swept liquidity and mitigated. And so this was never really tagged into. And you can see today, like, look what happens today, right? As soon as it hits it, uses this as inducement, and then it goes down. And so now it does look like it's going to come back down at least below this, but we'll get into that right after this. But you can see that it was a logical level, right? I mean, if it taps it today, it's like, oh shit, it would have worked today. So it was a logical level. However, I had to be more aware of this level as well. It's just being over prepared, and I was just under prepared. As soon as I got taken out of this right here, I was like, just kind of felt defeated, because I just felt like I was so accurate again this week on just the analysis, and it's just execution. I got stopped out. I did have a bunch of winners on this day, which was great, but again, I want to be executing to my plan in executing high probability trades every day, not just one day and be good out of the week. Like I expect better from myself. And so just seeing this, and I got stopped out, even though I knew, like, especially at the end of the day, like the structure was right and it was nailed. It's just frustrating sometimes. And so I just got a little bit overwhelmed here after I got stopped, and I was like, fuck this. Like, I don't really want to trade anymore. Like, I'm super just tired again, especially everything going on with the health here. But then, yeah, essentially what happened was, as soon as we broke structure here like this, I saw that we were just developing so much liquidity here, and I decided not to take this one, but it was so textbook, where we had, see this little trend line here, we're bouncing three times, we sweep liquidity, we come back up, break back up, and then I look right here. This is super interesting to me, where we have, again, if it was going to continue up to go to the higher point of interest, where would it have gone from? It would have gone from right here, right? So this was where the buying in the inducement was. This is where the liquidity was, where the demand was, right, for buyers. Now this failed with this, and so I know for a fact that this right here, where is it, is going to be the last candle that was responsible, right, for, or that, because if it went up, sorry, it should have went up from here. The fact that this went down and it didn't go back up and it just kind of consolidated and broke through shows me that the liquidity that was responsible for this major shift down, you can see it, was right there. So basically we had liquidity resting right in front of it, another inducement to our POI, which was gorgeous. And then from here, you had a break, or sorry, a sweep, you had a break. Again, didn't close or anything, but you can still validate that if it's a part of your rules, obviously. If not, then no worries, then you wouldn't have caught this. But then you have your inducement there. Like, this had basically everything you could want in a trade setup, especially with the higher time frame bias. Higher time frame bias being the targets of the day were down here. So you could have easily taken this one, maybe not. I personally would have had a hard time taking this, to be honest, unless it was from after seeing, yeah, it was the same thing here, how we had induced and then this one. So unless you had like a limit there and you were just confident that this was going to go from this one, sure. Or you just saw this breakdown, you say, you know what, I'm just going to put it here and then use this one as my level. Okay. But this one was really the A plus to me, because now that structure was in aligning in our favor, that was the immediate low that I was looking at. And so, yeah, that was that. You can put a 3 pip stop there. You could be a little bit more aggressive and go the 2 pip stop. I personally would have just done 3 and just would have been safe and put it above that candle, because it shouldn't get above that candle. And then again, target would have been down at the previous day low. So that would have been a really, really good trade. Again, beautiful, like exactly as anticipated. I just made the mistake of entering not in premium and at a level, again, I just wasn't as prepared as I should have been. And I paid the price for it. So it is what it is, guys. I mean, like, literally not much I can do now. You just got to continue trying to be, trying to learn, and that's it. And saying, okay, what were these mistakes? And then we can go back and analyze them later. So today was an interesting day because this was the target, right? Essentially the liquidity pool, right? Because think about it, this is where New York high was, and you can see that this is where the majority of the liquidity came from. We got that major sweep, obviously hit an important level here, and then died, and then now we had that structure validating down. So as soon as we take out previous day's lows, we have this kind of accumulation here that forms. What ends up happening is we have a sweep and a break in structure like that. At the same time, we also have this breaker block right here. That's going to be a higher time frame breaker block if I go to it. So that's what I would have actually been anticipating. Yeah, on the 30-minute, you can see it beautifully. And this is the breaker block here, because this failed to break a low. This failed to create a lower low. You can see that, right? Sweep. It just swept. It didn't create a lower low. It just swept and then broke up. So as soon as that breaks up and it goes through it and it zips through it with a clean leg like this with imbalances, you know that this is going to be a good support. Additionally, we had all these equal lows here form in London, which was, is likely now to get taken out, right? We hit our block there that we wanted to see get hit yesterday. You can see we mitigated off of it. There's our breaker, or sorry, our order block there. We closed through, dabble up into it. So if it can break through this right here and get under, I think for sure it's going to come back down at least here before going up, or it's going to come down and follow this structure, right? Follow that structure down. And again, we also have a weekly low right here. This is the liquidity pool I was looking at as a second target. So the first target on Thursday was from here down to here. That was my target. Now, this was the other level where all these equal lows are, and this is a weekly low as well. So a huge liquidity pool. And yeah, that's basically it. Let's jump into intraday today. I literally wasn't on the charts at all today. I actually slept in, but let's see what happened here. What is there? In London, you can see 2:55 a.m. So basically 3 a.m. created that sweep right here, and then we broke up, right? Then we started breaking up. Where do we get up to? Is there any significance in this leg right here? Yeah, there is, right? We have inducement, POI right here. Oh, let me just mark this off, right? Then we have our inducement and POI right here. We get that reaction in London. So we know that there's probably going to be some liquidity resting here, right? Okay, we know that there's probably going to be liquidity resting here. So what ends up happening is during London today, it gets up there. We have our strong low here. However, it is a little bit sketchy to take that one, just how it is, because you have these equal lows right here. So I would have probably anticipated a price to come back down into here, to be totally honest with you. I would be a little bit sketchy, or it would be a little bit sketchy to take this from right here, even though this was structure. And we did have significant inducement here. So potentially I would have considered that and taken it, because I know that I'm looking at taking out all these equal highs that were left yesterday, right? We have these equal highs, we have these equal highs, which was New York. And then we also have this point of interest right here, which we can further refine to this right here, this last up candle before the real down move. And you can see that's exactly where price went up to today. And then this one can be mitigated, or sorry, refined to there. And so let's see if there's any entry on the 1 minute up here following the criteria. Well, nice clean leg up. We have a sweep, break on structure, no real inducement, right? But what we did have, this is probably a 5 minute, I'm assuming. Let's see. Right? So we had a 5 minute break in structure right here. So you can argue that this was the sweep, this was the break in structure. This is going to be your order block, right? Look what's right at 50% of that order block. There's a little refined order block right here. So you could have just taken this one here. Yeah, like this one would have been a valid trade for me in London, kind of this is exactly what you'd want to see, right? The timing right at 5 a.m. and so on is going to be that pre-New York pullback. And then what happens, look at as soon as we get to New York launches to the moon. So you could have been definitely targeting liquidity, entering on that, targeting liquidity. And let's see if there was anything here. I don't think that there was. You can refine this down to probably, I would say right there, like this is probably the last two down candles that took out liquidity. But you can see blocky candles right here. I would definitely just be aware of that. I like to see where, that's where orders were injected into the market when they're blocky like that. Blocky there, blocky there, blocky there. So you can see that's exactly where this one held. But realistically, there's nothing on this trade for me personally, for structure plays. If I was looking at, even for inducement plays, there wasn't really anything, just sweeps. This would have been structure right here, right? So I guess you could have taken that right there. As soon as it closed above, then you take the next candle. Let's see if you trade breakers, that would have been a good breaker to trade right there. But again, that's not something that I would take personally right off, to be completely honest with you. This is the play that I was looking at actually. When price got up to here and we tagged this level, I was actually looking for shorts right here. Just late in the day, I wanted to see if I can catch something. I had a limit and it just swerved me, where we broke that structure and then we broke 10-minute structure and swept 10-minute structure as well. And then this one, again, we had that kind of W formation bringing us right back up to our POI. And it's funny because my POI was this one that I marked out. This was the order block that I marked out right here. And then I just refined it just like that. I think I have it right here. Yeah. See, so I just refined it. I was going to enter right up there. I had my limit set. I could have actually even put my stop lower. My stop was actually originally lower, but I'm like, I already had a loss. Like I don't want to be aggressive. I'd rather just take my pips. This is truly the strong high right here. If I can get take it into the market and then ride it back down quick and then just close it just around here, then I make up for my losses and I'm that's it. I'm done. But yeah, you can see it just never tagged me. It left these equal highs there, and then it just tapped through it, which gave it enough liquidity to push it down. So that was my trade that I was looking at today after sweeping significant liquidity, mitigating that 1 hour POI. And then again, still with the higher time frame focus that, okay, well, structurally we're down, right? Structurally, we're still down. Obviously, this is going to be that last structural point, extreme. We tag it, sweep, and also get some internal plays, right? So actually, I want to make this clear so then you guys can understand this, because this is really important for a model. I always say this. I say anyone that messages me, I always tell them higher time frame sponsorship, okay, lower time frame model. Let's say entry model. So what's higher time frame sponsorship? You could, well, it's really up to you. Like 15-minute can be your higher time frame sponsorship, right? So you just got to test that, but keep it simple. This is what it is, right? So for us, what was it? For us, it was, we had a 30-minute order block right there that was being induced. Okay, so let's see. For higher time frame sponsorship, we'll say 30-min OV plus inducement, right? So we can say, or you can even start off at the hourly and 4 hour, which these are going to be the good ones, right? This is a rejection block on the 1 hour. Okay, perfect. So now you have even more confluence in and around this. Okay, and then also at the same time, it's 13600 big figure. So you have that as well. So you have your higher time frame sponsorship is here, right? We have structure. Okay, I should actually put that ahead, right? Structure, higher time frame sponsorship, lower time frame entry model. Okay, easy, 3 steps. So there it is, right? We'll say, sorry guys, I didn't have this plan, so I'm just running with it. So 1 hour rejection block, 30-minute order block plus inducement. Okay, perfect. I'm completely content with that. Okay, that's a good higher time frame sponsorship. What I mean by sponsorship is that this time frame, the 1 hour, okay, 1 hour is going to be providing the liquidity to sponsor the lower time frame sells, meaning that there's a higher probability that if you get a lower time frame sell, that you're going to have enough liquidity with it that's sponsoring or that's being sponsored from this higher time frame level to really push price down to the point where at least you can move your stop to break even and stuff like that, right? So again, my range for downside would initially be right here, right? Because this is going to, oh, I don't know why I did that line. 1 second. My range would be right here, right? Because this is the next order block. If we're looking at efficient structure, we're looking at this one was mitigated, boom, and now this one gets mitigated. So if I'm looking for downside targets, I'm looking at it right here, right? It's probably going to get stalled right around here, and you can see that's what it's been doing. So sure, it can continue up from here, but if you have entries up here, you could ride it down there, be cautious around these levels. So anyways, getting back to it. So we have our structure in line, check. Higher time frame sponsorship, check. Now let's go down to the lower time frame entry models. Do we have it? So what's going to be in our lower time frame entry model? Well, let's list it out. We have sweep, break a structure. This one is what actually worked, right? You have your inducement, and then you have your order block. So this is the one that actually worked, and this is the actual play that you could have took. So let's go. Entry model is going to be, right, consolidation, sweep, break of structure, inducement, and then some POI that you're going to be entering off of. See, so that's it. This is a model where you target wherever you want. But again, you know that this is going to be the higher time frame level. You can see on the lower time frame, you also have a POI here. And yeah, that's it. So now you have structure check, higher time frame sponsorship check, and lower time frame entry model check. All of it. That's your system. That can be your system entirely if that's what you want. I have some other things that I incorporate for confluences and stuff like that. Sometimes I don't wait for the break of structure. Sometimes I do have a liquidity play up here, again, using different entry strategies and stuff. But this can sustain you completely fine. You just have to follow it systematically every time, right? Every time you do the exact same thing. Let's go through another example actually before we hang this one up and call it a day. We might as well, right? Earlier in the week, right here. Okay, just going back to test it, or here. So what do we have here? Higher time frame sponsorship, 4 hour. We have a fill or a, one sec, fill or a hidden base, right? So at that level, let's go see so we have our higher time frame sponsorship. We have our structure here that was swept, broken. This is our real structure point right here. Why is that a real structure? Because this one didn't create a higher high. It just swept and then closed. So as soon as we break below this one, that's going to be the real one. We have a hidden order block right in front of that, or right at that level. We get that retracement right back to it. Perfect. This is where we're going to be looking for our sells. Now let's go into smaller time frame. Do we have a sell model? First of all, we have this point of interest right here, right? This point of interest right here, refinement. If you wanted to wait for the 15-minute, sure, right? We have a sweep, break a structure, inducement. There's your entry, right? Your stop above there. If you wanted to refine it because you wanted to be more into that level there, let's go to the 5-minute. Is there anything else that you could have done? No. Let's go 1 minute. Right here, sweep, break a structure, inducement, POI. There you go. So there, you could have done that right there. On the 1 minute, again, where's your target? Let's go back up. You can use your higher time frame as targets, right? So you can use your higher time frame as targets. If we're looking for a lower low on the higher time frame, right? We got that sweep there. We break structure. We come back up. Well, this is going to be our lower low, right? We have a bunch of confluence there. There you go. There's your target, 20R. Okay. So there you go. That's how you could have. That's a good model. If you want to go back and test that, go ahead. It's something that works. It's something efficient, something easy to notice and easy to follow. Again, it's something that I use, but I have different confluences and I have different things that I use as well, including like smart money divergence and SMT divergence, excuse me, and all that. Yeah, I think that's it, guys. That's it for the day for me, at least. I'm gonna go take a break, go relax. I hope this helped you guys out and maybe can help you with your testing now. Now you have a model to go back and test and go gain some data on. If you want, I think the best thing, or like if you're wondering how can I like improve or get better and learn more, I think the best thing that you can do is use that model. Now you have all the parameters for it. Go through previous data and go pick them out, go pick out spots, like go pick out examples, like go do this one here. Like I said, pick out the examples, look at all the confluence at this level, multi-time frame confluence at this level, and then go look at why you would have taken it and screenshot everything and just start making case studies. If you make 200, 300, 400, 1,000 case studies of the same trade, you're going to start to realize, oh shit, this happens over and over and over again. And now I know exactly how it looks because I've done it 1,000 different times and I logged every single one. And you don't have to wait for them to happen in the live market for you, because you can't, right? You have to know what it looks like at such a deep level before they actually play out, before you can actually execute in real time. Because in real time, it's different. There's things that are happening. There's emotions that are going on. There's things that are clouding your judgment, and you're not seeing things entirely clear. And so it's absolutely important that you've internalized your setup and internalized your structure and know it at such a deep level that when they pop up or when it's developing, you can foresee it happening and foreseeing it getting to these levels. And when it does, you know exactly how it looks when it's a good setup and how it looks like when it's a shit setup, right? If it's coming up in a certain way and you're like, oh, this isn't how all my setups that I've logged, the 1,000 trades that I've logged, they do this exact same thing, or they do something very similar. And if they don't do that, then now you know in the back of your mind that something's up with this, and then you get that intuition. That's where the intuition comes from, is seeing something so many times play out, that even if you can't articulate it when it happens another time and something's not right, that's when your intuition kicks in. But you need to have that foundation set where you have, again, hundreds or thousands of the exact same process and trade set up and established. And I think that that's super important. And so hopefully you guys do that. I think that's how you really will get to where you want to be in trading. It's something I still do, and something that I keep pushing towards. And yeah. Okay, guys, I'm going to be done. Maybe I'll upload a video tomorrow or on the weekend, doing like a case study or back testing or something like that. I'll keep you guys posted. It's dependent on how I feel, honestly. But yeah, thank you guys so much. I think we've literally hit, look at that, 324 subscribers. I'm just so excited, about it all. Like I can't believe it. So thank you guys so much for everything. Super appreciative of everything. And yeah, I'll catch you guys in the next video. Have a great weekend, and we'll catch up soon. Okay. Cheers, guys.